If you've wanted to go full-time into crypto and leave your 9 to 5, this is the video for you. Along with this video, I'll leave a link to the playlist on my channel, How to Invest in Crypto, at the end of this video, so you can watch more around becoming a full-time crypto trader or investor. Make sure you've hit that like button and subscribe to the channel so you can see more of this content pop up on your newsfeed. Remember to hit the bell notification icon as well. And of course, the links down below will have Twitter and Instagram so you don't get scammed. Use the official links down there. And Patreon is down there as well if you want to join us for our weekly reports on the financial markets. I'll leave a link to all of the things that I'm doing in the video today, along with Swyftx, which helps with portfolio tracking, which is going to be the topic of today. So what we're looking to do today is compare assets against our cryptocurrency portfolio and use a baseline of Bitcoin and Ethereum to see how much the gains were for Bitcoin and ETH compared to other traditional assets and of course other riskier cryptocurrencies. So the idea here is that we want to beat the baseline, and I'm going to use Bitcoin and Ethereum as the baseline. And if we can't beat those two, then we're better off holding Bitcoin and Ethereum because it reduces our time that we have to spend in the market, and we can go do something else and improve our knowledge as investors, because the goal here at the end of the day is to get out of a grind, a 9 to 5, or make some more money to do something else with house deposits, holidays, whatever that is. So we want to reduce the time we spend doing meaningless tasks and increase the amount of return that we see from the market. So I've got a list of assets here, and then I'll show you them in a spreadsheet. We're going to look at NASDAQ and just look at the returns based on the beginning of the year. So the first trading day of 2021 up until today's current date, or today's trading day. Now, this isn't some way that I would generally look at my cycles. I like to look at cycles in terms of major lows and major highs. However, this is a universal way that most people, or majority of the industry, refer to profits and losses. So we're looking at it from the first trading day of the of the year, the 1st of January. In some cases, the first trading day, 4th of January. Okay, so NASDAQ 26.6%. Next is S&P at 24.9%. And basically all I have here is the chart from that date to the current day. It's going to vary slightly just as the trading day progresses. The next day is, or the next chart is the XJO. So this is for the Aussies, only 12.5% this year if you were invested in the Aussie stock market. Gold is down 6.5%. Silver down 16.2%. Tesla up 48.5%. Bitcoin up 72%. And now I have something a little different here, comparing Bitcoin to gold itself. So we've seen that gold is down and Bitcoin is up. Just using the chart here, just based on the 4th, because that's gold's first trading day, and a rough guide here, it's about 60%. And you're probably wondering, well, if Bitcoin's up 72 and gold's down 6, wouldn't that just mean it's up 78%? I'm just using what's on the chart when we look at Bitcoin against gold here on this, using the Bitstamp exchange for Bitcoin. So it's up 60% against gold. So this is a quicker way to do one asset versus another asset if you're looking for a specific asset. To do that, you would just type in the asset, Bitcoin USD, put it on the exchange that you want, Bitstamp / and then look for whichever cryptocurrency or asset you want next. So if I want Tesla, then I go to Tesla, hit enter, and it gives me a Bitcoin against Tesla chart. And at the moment, we can see that's up 12%. So I'm better off holding Bitcoin than Tesla for this for this year, I should say. And it's up about 12%. Let's look at the next chart. This is against the NASDAQ. Bitcoin's doing better than the NASDAQ by 18%. And my last chart was Bitcoin, Tesla as well. So let's look at Ethereum, because Bitcoin's only up about 70% for the year. And Ethereum is now up 490% for the year. So if I just held Ethereum, my whole portfolio was totally Ethereum for the entire year, I'd be up 490% compared to all of those other traditional assets and Bitcoin. Now let's do the same thing with ETH against Tesla. So if I held Ethereum instead of Tesla, then I would be up 200%, because Tesla has done pretty well over this year as well, especially for the traditional markets. And it's in a slightly different cycle as well. You know, it's had its peak and it's been running up for many years, whereas crypto, it's only really been going in its bull market since late of 2020, depending on where you want to pick that low point. So how does all that look on a chart? So we can see some of the numbers. Well, we've got NASDAQ, S&P, and the rest are here. 26, 24, the rest of the data is here. And now we have Ethereum at the bottom. And obviously trumps everything here. And Bitcoin is a distant second place to Tesla's third place. So the idea here is my portfolio, I'd be better off holding Ethereum for this year. You're probably thinking, well, that's great to know now. It's all in hindsight. That's part of the learning with the premium course when we learn about trading, looking for strong horses. And that's what we want to find when it comes to the cryptocurrencies. And we want to find stuff that is about to move. Now let's take a look at some of the major cryptocurrencies. Some of the cryptos which were really hot at the beginning of the year, some weren't, such as Sand. That was a pretty difficult one to pick so early on. And of course, some of the cryptos which people for some reason absolutely love, but you'll see do absolutely nothing for their portfolio when we compare it to the major cryptocurrencies. So we're going to go through Matic, VET, which is a pretty popular cryptocurrency among new investors because it tends to have a small or a low price, although the market cap isn't so low. ADA, Solana, Link, Luna, AVAX, Sand, XRP, Litecoin, Doge, and then the total market cap to see how these fared against the total cryptocurrency market cap. So we're just going to look at the same thing again. Matic from January 1st to the current price, 13,290%. Now, of course, what happened in 2020? Not too much for a lot of these cryptos. It was sideways and down, sideways or down. And if you had the patience and the foresight and you were looking at the fundamentals, potentially it's a crypto to be getting into, but I'm not going to get in that part. This is really just to understand how to assess the portfolios and see what we're doing moving forward into 2022 as the year rounds off and we're trying to improve on our positions going forward. Another point to note is, can we expect to see these gains again? These gains are going to pop up in news stories and crypto announcements come 2022, saying, for example, Matic got 13,000% and sort of will stir up a lot of emotions for new investors thinking they can do the same thing. I personally don't think Matic or the rest of these cryptocurrencies are going to do the same returns as what they originally did. And I think a lot of you guys will understand why as well. The market caps have increased a lot. The gains aren't seen. We usually get diminishing returns as the market progresses unless we get a major pullback. And so we can see that a lot of these have already pumped a lot, but are we still going to do better than traditional markets into 2022? And next on the list is VeChain, as I mentioned earlier. So VeChain from early January, 1st of January, is only at 382% to its current price. Of course, its peak was pretty decent, but at the moment, Ethereum is outpacing VeChain. And so if we're looking in terms of a longer term hold, then Ethereum is, for one, the safer bet. It's a bigger market cap. It has more use out there, and the gains are better than VeChain. And so that's one way to assess your portfolio to understand, well, is this something that I want to get into? Is it something that I should sell out of at the end of the year? For the US guys, their end of financial year is coming up in December. So these are things to be aware of if you want to become full-time investing, full-time in cryptocurrency, and you can start to rejig your portfolio. The other thing I'll look at is, of course, the 50%. Ethereum has been breaking through its 50%, whereas VeChain has been knocking on the door of the upside and continuing to get rejected at this point. Some might say, well, it's down, maybe it's going to be a good time for it to go up. Personally, I want to get on things that are moving or are just beginning to move. I don't want to be on something that's heading to the moon, but I want to see them in a strong suit. I want to see them as strong horses and beginning to move, which we talk about a lot on the channel, and there'll be a link to the playlist at the end of this video. So VeChain not doing as well as Ethereum, but still better than the traditional markets. Next is ADA, and ADA's at around 650%, although its top was at 1600% from 1st of January. So it's still doing pretty well, even though it's been heading down this entire time. Next up is Solana, 12,612% from the beginning of the year, so absolutely massive. And this still seems to be holding up reasonably well, considering the massive gains that it has had this year. So if I'm looking for a stronger horse, you can already see this is what I'll be looking at here. It's above its 50%, and it's still continuing to potentially consolidate. Nothing's confirmed just yet, but that's what I'll be looking for. And you can see the difference between that and VeChain or VET, where it's been hitting its 50% and falling back down. So after Solana, I have Link, and same deal with Link. Link's only up about 93% on the year and is barely keeping pace with Bitcoin. So if you had your money in Chainlink, then at least you're doing slightly better than Bitcoin. You're getting crushed by Ethereum, but at least you're doing better than traditional markets. Luna also done really, really well, 11,533% from the beginning of the year. At the moment, it's looking like it's breaking through and trying to attempt another parabolic moonshot at this point. But of course, these aren't buy recommendations. We're simply assessing the amount of returns that these cryptos have had since the beginning of the year to understand whether we should be continuing to invest in them or count our lucky stars and look for something else. And AVAX, 2,825%. We also have Sand, 14,691%. We have XRP. So now we're getting to some of the old cryptocurrencies, the stuff that some investors seem to hang on and marry themselves to for whatever reason. Ethereum has obviously been beating XRP this entire time. And since the beginning of the year, it's only done 287%. Now, this one is going to hurt a lot of people, and that is Litecoin, 29%. Now, I'm not sure if you're holding Litecoin, but if you are, you're only barely doing better than traditional stock markets. And you can see the traditional markets of the NASDAQ, S&P, 26, 24, and 12%. And so your Litecoin position is barely breaking even against those guys there. If you add in inflation, then you're probably wasting your time with something like Litecoin. You can see it's been rejected at the 50% once. It attempted it and then fell back underneath the 50% again. So it's in a much weaker position. And of course, if these lows get taken out, then it's not looking too good for Litecoin. So you want to be getting into something that's a little stronger. We have Dogecoin. Again, crazy as it is up 3,500%. And the total year is about 15,000%. So that puts Dogecoin in the space of the metaverse tokens and some of the new layer 1 projects with the amount of gains that it's had this year. And finally, what we can compare it all to is the total cryptocurrency market cap. So the total market cap is up 200% since the beginning of this year. So this is another metric that we want to stay ahead of. It's similar to staying ahead of the NASDAQ or the S&P 500. If you're doing better than the total market cap, then you can call yourself a professional full-time investor. So really, we're looking at 205%. If you can beat that, you're doing pretty well for the entire year. These are all the statistics that we've just looked through, and I'll show you an example of my own portfolio at this point in time, something that's happened in real time, and you just don't know from the beginning of the year how it's going to pan out. So Matic, in Sol and Luna, and of course Sand have been the absolute standouts here. AVAX has done pretty well, and of course Dogecoin, funnily enough, has also done really well. The ones to stay away from, of course, are Litecoin and, at this point, XRP. Link hasn't done so well in the bull market either. Now let's take a look at one of my examples and then what you guys can do as well so that you can reflect on your 2021 to see how your returns have fared against just the blue chips in cryptocurrency. And so you could set up something simple like this. You should be splitting your portfolios up into a few sections if you want to be getting in short term, medium term, and long term. Now, if you only just want to do a hodl, not worry about it, like my example will be, is just a buy and hold, not worry about it, then you might only need the portfolio of the hodl. But if you want to trade in and out like I do with my trading portfolio, then that's another option. And then of course your medium terms as well. Maybe that's medium term weekly to monthly swing charting. This is monthly to yearly, and then trading might be hourly to daily, stuff that you see pop up that you think has good potential. So if you're not meeting at least the very least Bitcoin at 70% for this year, then you're possibly wasting your time. However, there is a disclaimer. There's no time wasted if you are learning something. So make sure you're keeping records of what you are doing. The second number here to remember is 490%. So if we just held Ethereum from the beginning of the year, we should be up at least 490%. Now let's take a look at an example that you guys can use, and I'll use one of my portfolios as the real life example. You can be splitting these up into a trading, a medium term, and a hodl. This is going to be more around your hourly to daily. This one will be like your swing trading of weekly to monthly. And then your hodl can just be something you buy and hold, and you don't want to touch it for months to years. And that's what my super fund, my retirement fund portfolio is down below. As I've mentioned before, I'll leave links to the stuff that I'm talking about here, in particular things like Swyftx, so that you can set up your own portfolio in Swyftx. You can see that they have it on the app as well. And you can basically track how much your portfolio is going up and down daily, weekly, monthly. Hopefully just not too often, otherwise it'll drive you crazy. So Swyftx link will be down below as well. This is my retirement fund currently. So it's sitting at 425,000, but I'm using what's in the digital currencies already, 405,700. There's 20 grand cash sitting in this account. So for 405,000, what is my return on this? So my retirement fund started at 113,000 at the beginning of this year. However, if you have been following me on Instagram and Twitter, which the links are down below, make sure you like and subscribe while you're down there as well. You'll know that this account started at 26,000 a few years ago. Now, the increase so far is at around 405,000. And of course, this continues to fluctuate with the price of Bitcoin and ETH at the moment, as they're the two cryptos that I'm holding in my account, just Bitcoin and Ethereum. And in terms of the return, well, the difference is 291,891. So if you haven't done the numbers by now, you'll know that it is 258%. So really, you can see the real-time numbers. I've beaten Bitcoin, but I haven't beaten Ethereum. So at the beginning of the year, I would have been better off selling everything into Ethereum, because I would have potentially made double what is currently sitting in the account. But of course, that's hindsight. And if you're leading yourself into, and if you want to become a full-time investor, at least keep track of what you're doing and move forward. And if you want to go down the full-time investor path, make sure you're keeping track of what you're doing, just as I'm doing here. I can see what I should have done better, why I didn't, and how I can improve on that moving forward into 2022. So I have one strategy for my super fund, my retirement fund. I just want to buy and hold and not have to worry too much about it, because I'm also trading, which the guys in Patreon see day to day what's in my portfolio. There's a link in our Discord to show all of the cryptocurrencies that I'm trading in my portfolio. Why not, where I'm getting in, where I'm getting out, why and why not as well. And if you're interested in that, there is a link to Patreon in the top of the description as well. Now, at the end of the video, there'll be a link to the playlist. These are all free videos that you can check out, and there's plenty of data and information in there on how to create your own plans for your trading. This is a great place to start, especially going into 2022 if you want to improve on your results for the following year. So check those out. Make sure you like and subscribe to the content, bell notification icon if you haven't already. Thanks very much for watching, and I'll see you at the next video. Until then, have more fun to get more done.